In this video, we're going to be talking about SoFi stock. This is actually a new company for me, and currently I don't actually hold it. But for a lot of investors out there that are wondering why this stock shut up on Q3 earnings, but don't actually know much about the actual company, this video is here for you. We're going to be doing a full breakdown of this company, talking about everything that they do, the projects that they're working on that I'm very, very excited for, and talk about what they could potentially be worth into the future. So unlike traditional banks that have physical locations, SoFi is not doing any of that. Okay, they're strictly trying to make their entire business on the mobile platform. And they seem to be doing literally everything that banking could have to offer. Whether you want to deposit your paycheck directly into SoFi money and actually start to build up an emergency fund, or going investing with that money and actually, buying stocks in crypto, or potentially even, going shopping with SoFi credit card. You can purchase a home with SoFi mortgages, or they even have student loans, home loans, personal loans, even insurance. They have every product that you could ever want, all on your mobile device. And I gotta tell you, although they are, like a bank, a very, specific FinTech type of company, they are growing like a true tech company. So let's go over some of these numbers. So SoFi's members grew to 2.9 million users in this quarter, which was up 96% year over year, or even 35% quarter over quarter. Total products actually grew to 4.3 million, up 108% year over year. And whenever you see these sorts of product growths grow faster than the amount of members, that means that there's a whole lot of cross buying going on, which means that although people might have only come for one product, maybe they saw that they did free commission buying and selling for stocks. So then they go and they join for that reason. But then they realize that, the insurance that they're offering is actually cheaper than the one they had with a traditional company. Okay, well then I'll take SoFi's thing. And then, well, why am I not keeping a SoFi credit card as well? Because they're going to allow me to actually get rewards and then put those rewards directly into my stock account. Like, these sorts of benefits are why people are actually, cross buying so much on SoFi. And the third quarter actually marked this as being a new record highest amount of cross buying that they've ever seen, by existing members. And one of the really cool ways of actually doing this to, achieve these types of numbers was they actually started bundling the personal loans and the SoFi money accounts. So whenever you would create one, it would create the other as an option for you to do so. So it made it really open and wide for people to start doing it. And so they saw a 65% increase sequentially, quarter over quarter, for the amount of cross-selling that happened between personal loans and the SoFi money. And because it is a fintech company, they have so many ways to grow the business that don't actually cost a lot for them because, it's an online digital platform and they just have to offer a new service that might have a higher interest rate or something like this. One of the ways that they did this was just increasing the selection of cryptocurrencies that they offer through their platform. If you know through Coinbase, which is another stock that I cover very often, is that this alone can actually increase your profits a lot just by offering a higher selection. People love, especially in the retail space, to speculate on altcoins. It actually makes a lot of, profit for the companies just by increasing their selection, which doesn't cost a lot to do at all. Now, if you know SoFi, you probably know about Galileo, which is a company that they acquired, just a couple years back. That's actually quite a very interesting acquisition. They're sort of a B2B company that offers other banking solution businesses an easy way to start offering new products for such things like payment processing solutions or even credit cards. One of their big actual clients that they actually deal with all the time is actually Current. You see this a lot on YouTube through YouTubers like Mr. Beast, for example. So every single client that, Current or any of the other ones, which they added 35 new clients here just in 2021, all these clients are bringing in new customers and we get a portion of every single transaction that happens, and that's all through Galileo. So the way that they calculate growth for Galileo is adding up all the possible accounts that are through Galileo, which eventually got to 89 million users in Q3, which is actually up 80% year over year. This is absolutely insane growth whenever you compare it to last year, for which we grew 130% that last year. So we're growing 80% on top of 130% growths, from the year prior. So all the credit goes to Anthony Noto, the CEO of SoFi, that was actually able to spot a company like Galileo, get it for such an amazing price at the time, and understand that digital banking for these smaller companies like a Current or a Chime or something like this is what people are looking for, because they're not, happy with the traditional banking, like the legacy banking companies that are standing right now. They want better interest rates. They want all these things. And he was able, to not only take SoFi to be one of these new sort of startup companies, but also say that, there is going to be a whole bunch of competition coming with us and we can't stop them. So we might as well help them get there and take a percentage of everything that they're doing. And Anthony Noto said this amazing quote to finish up Q3. You got to hear this. So he said, "I believe we've accomplished more at SoFi across our uniquely diversified platform of mobile-first financial services products over the past year than many other companies will achieve in a lifetime. That's just crazy to think about. And I think he's pretty right. Like the way that this company is expanding is just insane. And they're not quite a household name yet, but they're quickly becoming one because, their advertising and marketing is just insane right now. A whole bunch of people are growing to actually learn about this company. And you see it whenever you just see the growth in members and the actual product expansion. Now, I said we were going to talk about SoFi potentially becoming a bank, so let's talk about it. Currently, SoFi is regulated by 50 different states, which means that they have to follow protocols and different changing regulations in all 50 different places that they are currently in. Which means that once SoFi actually gets a banking license, they're only regulated by the Federal Reserve and the FDIC. This will make things much easier because they won't have this shifting, amount of different compliance rules, which actually end up being very expensive and very tedious. And by being a bank, SoFi will have a lot more options for how they want to grow. For example, right now they're limited to how much actual debt they can have on their balance sheet, as well as the number of actual mortgages that they can hold because they're not an official bank right now. The license was actually allow SoFi to actually determine their own interest rates, so then they wouldn't have to actually work and actually pay a sweep partner to do it for them. And then going back to Galileo, like right now they're needing a sponsoring bank to allow them to offer the certain products that they're able to offer. But if SoFi becomes a bank, then they could become the sponsoring bank for all the products. And then they can expand it as much as they want to all these different B2B opportunities and offer, different companies like Chime and Current, different products because they're the ones setting the risk. The opportunity here is crazy big. It's just a matter of how long it's actually going to take them to actually get this license. I think if you watch or read some things about this banking license, people are making it out to be like a next week kind of thing, where I kind of see it as being like a next year, maybe even longer kind of thing. These exams are extremely long and they do not hand them out very easily. So I wanted to draw your attention quickly to this next quote. It's quite a big one, but I really want to read it out to you. It was from the most recent, Q3 earnings call, but you just have to listen to the way that they're actually approaching, this whole business going forward. He said, "We're really fortunate in that we've built the business for durable long-term growth, taking a harder path. Our lending business originally is built on the back of 50 licenses, and these licenses are our licenses. Not borrowed licenses, not rented licenses. Same thing with our home loan business and in cryptocurrency. We have money transmitter licenses, so we've been taking a harder right approach over the easier. The same thing goes to applying for a national bank charter instead of applying for an ILC or applying for a FinTech charter or applying for a crypto charter. We applied for the full Monty, exactly what the acting head indicated everyone should be applying for if they're taking deposits or taking cash. This made me extremely bullish on the company, and it really cannot be undersold into anything other than just absolutely amazing, okay? This type of mindset is what separates them from being, a Chime or a Current or any of these companies that are, using a lot of borrowed tech versus them who are trying to actually create their own infrastructure. You see that very much so in companies like Apple or Tesla, who are not buying a lot of their products. They're creating the products so then they don't have to license it out and, spend all that money. They are the actual, original equipment manufacturers. Like they are the big deal. That is by far the harder approach, but they're pulling it off. So I potentially would be scared, investing back in 2011 to 2015 whenever they were trying to create these processes. But now that they have them, I mean, they are set. This is insane to know this. Now, more onto the actual stock and less of the company. The market cap currently, as the market puts it, is around $18 billion. 26% of this company is being held by insiders, okay? That is so amazing considering that this company is already over 10 years old, and yet still, they are still holding a ton of this company and not selling. In fact, in the last 6 months, whenever you look at insider transactions, about over 1 million shares have been sold by insiders, and yet the amount of purchases that they made in the last 6 months, insiders have bought around 320 million shares, okay? So they are still extremely bullish on this company, even into these later years. Held by institutions is a little bit less fun, around 34%, but they are also probably looking at their revenue, which obviously we haven't spoken about yet. We're only talking about members, products, Galileo, all these sorts of things, but not a lot of people are actually talking about their revenue. Net revenue was around $272 million, which was actually up only 35% year over year, which is still amazing, especially for a bank. But whenever you consider the triple-digit numbers of the members, products, Galileo, like everything like this, it doesn't quite, get you as excited, but still 35% is still in those sort of, tech company growth numbers. They aren't currently profitable either. They are still hitting in negatives because obviously you do not, get these types of growth numbers whenever you're not advertising and marketing like crazy. So it's one of those companies that are expand now, grow now, everything like this, and worry about profitability later. The problem with me is that, a lot of these companies usually have high revenues as well, but the way that they're sort of doing is that these crypto, stocks and investing and everything like this, the amount of money that they take on grows slowly, okay? And the trails on those are not big at all. The amount of money that you get from, small accounts at first, don't really pay off. But as people get, really, really into your product, hopefully that they start to really bring over the amount of money that they have in your platform. And then that, that amount of revenue can get exponential. And the income would come too because you already have the clients. Like you don't need to grow as exponentially if we've already done the triple digit growths already. Now, in terms of what are our actual risks, right? Like whenever we look at insurance companies or financial companies, a big portion are what are the types of clients that we're actually taking on. Which leads me into my next amazing point, and that's the fact that they only really take on about 30% of the actual people that apply for personal loans because the other ones are just, too risky to take on as clients. And for a long time, SoFi just sort of had to say, sorry, we can't do it. But now they're actually innovating on even that because you don't just want 70% of the people that you just say, hey, we can't help you, like go to a different app or go to a different, provider. So what SoFi actually did was amazing. They said, how do we actually capture the 70% of the clients that we can't actually sell a product to? So they got a partnership with Pagaya to actually sell the information as lead revenue, go to subprime lenders that might actually want those clients that will fit in with their schedule so then they can still make money off clients that they don't even know how to serve. This is absolutely genius. And now, although it doesn't actually bring in a lot of revenue for them, it's not a huge target that they're trying to, get just off of, lead revenue, but it still just shows you how able they are to capitalize on every little inch of performance in terms of where they can find revenue, where they can find net income. So with all that, they actually ended up revising their 2021 guidance to about 62% growth rates for the full year and actually bringing in just a little bit over net $1 billion in revenue for the year. And I mean, they are outpacing their own growth rates. Like, for example, they expected to have 3 million members by the end of the year, and it just ended Q3 and they're at 2.9 million. Yeah, they haven't hit the target yet, but I mean, they have 3 months to hit the target, and supposedly from what I heard on the earnings call, they already have, but it just goes to show how incredibly fast they're growing, way faster than they even thought. I got one more quote for you from Anthony Noto from the earnings call of Q3, which was just amazing. So here it is. When we think about our total cost per member, which went down sequentially, which is quarter over quarter, we should have significantly even greater marketing costs, but we're driving the member growth through lower cost vehicles like referrals and other programs that are unique to SoFi. It's allowing us to achieve outsized growth in members related to expectations, but still delivering on profitability. I mean, just like mwah, French kiss that. Like, that is so awesome. Like, I love it. It actually makes me scoff at other companies. Like, how can you not grow the way SoFi is growing? Like, why do I have to wait for all these other fintech companies like PayPal, for example? Why do you not offer every single product like SoFi has done? Why are they able to expand this quickly and yet people are putting multiple hundreds of billions of dollar valuations on you if you are so slow to move and act quickly? And that's why SoFi is getting this like incredible valuation because we just see what's happened so far and we know that, Anthony Noto is not going to slow down on this innovation. He's going to stay innovation is top of mind and expanding their product pool and everything like this. I just love everything about this. Even this quote, like they're just doing everything possible to find new ways to still grow their members, but actually doing it through cheaper ways and actually expanding how fast they're able to do it. Finding that these cheaper ways are actually doing it quicker than the most expensive ways. So, I mean, it's just crazy. At the end of the day, SoFi is most comparable to a bank. Okay, so if you're able to hold, let's say a TD or a, Chase Bank or something like this for 10 years plus, to do that with SoFi today is going to yield you such high rewards, especially whenever it comes to dividends. You will receive a dividend in SoFi within probably the next 10 years. And by that point, whenever the market cap has potentially 5x'd by that point, the dividend that you're going to receive on this company is going to be insane. That's what's so exciting about owning a hyper growth fintech company like this, is that going into these later years, it will pay such dividends, and that will be so much fun to have at the time. Anyways, guys, that's all from me today. If you guys really enjoyed the video, I'd appreciate a thumbs up. Subscribe down below if you want to see more financial content just like this. Be sure to leave a comment on what you'd want me to talk about next. But until next time, guys, thank you so much. Stay safe trading, and I'll see you guys on the next one. Bye for now.